The entire ICC-CCT strategy really comes down to just some simple concept. Sticking to this concept has helped me stay consistent and confident in my gold trading. So in this today video, I am going to break down step by step and walk through exactly how I apply these concepts. I am just sharing what works for me personally. Now make sure to smash that like button, subscribe to the channel, and let's jump into the chart. Yeah, it's a complete gold scalping trading plan. First, we'll look about the how to find POI and entry criteria, timing, risk management, and the recent week backtest. And I will show you everything from the backtesting. Here, this is the latest. This is the recent week candle. Let's cut the candle and go to the 1 hour time frame. This scalping strategy is based on the 1 hour and the 1 minute. 1 hour will be the higher time frame and 1 minute will be the lower time frame. So first, let's see about the indicator. And I am using this indicator ICT Killzone and pivot. You can see this is the setting of this indicator. I will trade on the London session from 2 to 5 a.m. and then New York session from 9 a.m. to 12 p.m. on New York session. Let's see. Let's go to the London session. This is the 10 p.m. This is the 12 and this is 1. Let's see. When the 1 p.m. candle close, then we will see for the POI. And for the POI, we will use the CCT concept, which is called candle continuation theory. It shows that if the previous candle high or low is broken by the next candle, then the previous candle high and low becomes the POI for the third candle. Like this. This 12 a.m. candle is broken by this 1 a.m. candle. So this 12 a.m. candle high becomes the POI for the 2 a.m. candle. Let's see. Let's wait for the market to reach at our POI. Let's wait for the market to reach our POI. Here we can see it reached to our POI. When it comes to our POI, we will look for the 3 entry criteria. First, it should close below the POI. This is the bullish case, so it should close below the POI. So candle should be close below the POI and then above the POI. In this case, we cannot see any candle which close below the POI. Let's wait for candle to close below the POI. And we know this is the highest point from where the market is retracing to our POI. Our entry will be invalid if this candle touch our POI and then takes its liquidity up to here. And now we can see it's not taking any liquidity at this point. So our trade is valid until it took this liquidity. Let's wait for the market to close below this level. And yeah, it closed below this level. So we can see this is the POI. It closed below the level and then above the level. So first entry criteria is done. And the next entry criteria is we will look for the inverse FVG, inverse fair value gap. Here we can see the fair value gap. And let's see, there is the fair value gap. This is the first candle and this is the second candle and this is the third candle. First candle low and the second candle high is not meet with each other. So there is formed the gap which is called the fair value gap. And let's see, we will wait for the inverse of this fair value gap. This box is the fair value gap. We will wait for the candle close above this box. So yeah, it closed above the box. So a second entry criteria is also done, which is the inverse fair value gap. And we will see for the third entry criteria. And the third entry criteria is the candle range broken. Like we can see this candle close, this candle close, this candle low is closed by this red candle. So this red candle becomes the candle range. We can see on the recent candle, like this candle low is broken by this candle and this candle low is broken by this candle. So this candle is the recent candle range. After breaking the high of this recent candle range, we got the entry criteria third. After breaking the high of this candle, we got the entry criteria third. So entry criteria third is also completed. First entry criteria is it should close below the low it should close below the PY and then above the PY. And second is it should give the inverse fair value gap. And third is it should close above the candle range. 3 criteria is met. So we will take entry here with the proper risk management, and I will also show you how to manage the trade also. Let's see first. We will take entry here, and then our SL will be at this low, swing low, and our TP will be at this high, which is the liquidity point, and then our break even point will be the 50% of the range, like this. Here this is in this level we will take trade, and then this is the 50% level, and this is the full TP level. So we will put our trade to trade, we will put our SL to break even if this is the 50% level, which is this level, entry level. Let's see how it goes. Yeah, we can see this is the perfect SL first trade. Let's see the second trade, and this is the entry criteria. I use same entry criteria for the every trade. Let's see. This is the 3 AM candle. It closed below this. It closed below this candle low, but it's inside this bullish candle range. So it's inside this bullish candle range. If it broke this, if the bearish candle broke this bullish candle range, then I will look for the sell entry. But there is the bullish candle range which is holding the market, so I will look for only buy trade. So let's see. Let's wait for the buy trade, and then this London session is completed with one loss, and yeah, I will put that entry on the journal also. Let's see. This is the 22 December trade, and here 22 December. Let's see on the 1 minute time frame. On the 1 minute, this was the first loss, and was till the end. I will show you complete 1 week trade scalping of this gold, and I will show you the result, how it goes. This is the complete trading plan that I use every day to trade the gold, and any other pair you can use. I suggest you to use only on the session only, London session or New York session, or you can use on Asia session also. It depends on the which pair you choose. Let's see on the New York session. This is the 7 AM candle, and this is the 8 AM candle. After the 9 AM, we will look for the entry, and the next candle will be the 9 AM candle. So first, let's mark the PY and see this candle is open here and then closed here. Let's see how many PY it gives. And this is the first PY, and then this is the unfresh PY, because this PY already does by this candle wick. So next is this PY, and let's look on the left, and there is no any PY. This is the and there is no any PY. Let's go to the 1 minute time frame. On the 1 minute time frame, we will wait for market to reach to our level, and let's see. Yeah, it reached to our level, and this is the highest point from where it is retracing down. And here we can see it's not closing below the PY here, and after that it closed below the PY. It gives the entry confirmation 1, and let's look for the entry confirmation 2, which is the inverse fair value gap. Let's wait for the market to, yeah, we got inverse fair value gap, and let's see the candle range. This candle low is closed by this candle, so this bearish candle is the candle range. Yeah, this bearish candle is the candle range. So there is the 3 entry criteria is completed, and then our entry will be at this level, and SL will be at this level, and then target will be at this high, and our break even point will be at this level. This level is the break even point, which is the 50% of the range, entry range. Let's see. Yeah, it is to our break even level, and then next candle is to our TP. So this is the 1.4 R trade, 1.43. Let's journal it. 22 December. This is also the 22 December trade. Let's first test the 1 hour candle image here. After that, we will test the 1 minute candle image. In this 22 December, we got one loss. This is the one loss, and this is the one win, which is about 1.43. It means 0.43 RR gain on this day. 0.43 RR gain on this day. Let's see on the next day how it goes. And again, we have this is the 9 AM candle. Let's wait for the 10 AM how it goes. And the 10 AM there is no any entry because this 9 AM candle is not able to break any high or low of the 8 AM candle. So 10 AM candle closed this 9 AM candle. So we got one PUI here, and let's go to the 1 minute time frame and wait for the entry. And here we see there is the it closed below the PUI. First is confirmed, second is confirmed, and then third is confirmed, and also it hits the TP or a TP, which is this point from where market is retracing. So we do not get any entry here. So let's go to the next day. This is the 1 AM candle, and this is the 2 AM candle. We can see this 1 AM candle is not breaking any high or low of this candle. So this 2 AM candle is breaking this high, broke this high, and then this high. Let's go to the 1 minute time frame to see the entry. Let's wait for the market to reach our, it reached our PUI, and this is the liquidity level for more market is retracing. Let's wait for the market to close above the PUI, and it's closing above the PUI also, and it's give inverse FVG here also. It gives inverse FVG, and then there is the candle range also. This is the candle range. This candle low is broken by this candle, and then this candle high is already broken. So our entry will be at this level, and our SL will be at this level, and then our TP will be at this level, and then our break-even point will be at this level. This black line is the break-even point. Let's wait for market to reach to our TP or SL point. Let's see. It is to our break-even point, so it took our break-even level. And it's not taking any liquidity up to this. So if you got any another entry, we will look for entry again. It closing below the PUI, and then it closing above the PUI, and also it's forming the inverse FVG here. So our entry will be at this level. Our entry will be at this level. Here we can see I will give you the closer look. Like it closed below the PUI and then above the PUI, and then it's forming the inverse FVG also here. It's forming the inverse FVG also, and then closing this candle range high. So our entry will be at this level, and then target will be at this level. And let's see. And it's not taking our, so it hits our break-even point again. And let's see another trade, and this is the 3 AM candle. Let's wait for the next candle, which is the 4 AM candle. 4 AM candle broke this low. Let's wait for the 5 PM to reach to our level. It reached to our level. Like we can see it's the 4 AM candle, and it's the 4 AM candle, and then our entry will, and our trade timing was also closed by closing this level, by closing this candle. So our entry will not be there. Let's see. This is the 9 AM candle. We can see this is the 9 AM candle, and 9 AM, this is the 8 AM candle, which is which broke this low. This is broken too slow, but 9 AM candle is not did not touch that low. And after that we can see this is the 9 AM candle. Let's wait for the 9 AM candle. This is the PY level which is broken by this 9 AM candle, and then this becomes the PY for the next candle. And we can see this is the another level, and then this is the another level, and then this is the another level. This is the lots of level here. Let's go to 1 hour 1 minute time frame. On the 1 minute time frame, let's wait for market to reach to our level. It reached to our level, and then it's down, and then this is the point, and it's reached to our point. Yeah, so there is no any trade for this candle. And also we can see this is the 10 AM candle. Let's wait for 10 AM candle. Yeah, we can see this 10 AM candle is not able to break any high or low of the previous candle. So on the 11 AM candle we won't take any entry here. So let's go to the next London session. On the London session we see this is the 2 AM candle. We can see 2 AM candle close this low and then this low. So this becomes the PY. Let's wait for market to reach our level. It is to our level, and then this is the low. Our market is reaching to our level, and let's wait for the market to give it close below the level, and it's not forming any inverse FVG here. So we won't take any trade. Let's wait for market to again close above the level and then below the level. It close above the level and then below the level, and it's giving inverse FVG also. And our trade will be at this point, and then SL will be at this point. And yeah, we can see we got the one loss here, and we got the one loss here, and again it's forming the trade here like this. It's not closing below the PU. It's not closing below the PUA, so trade will be at this level, and then our SL will be at this level. So there is no our 1:1 trade. So if you do not find a 1:1 trade, so I suggest you to not took that trade. This is the 3 AM candle. Let's see for the this 3 AM candle close this level. So we will wait for the market to reach to our level. It is to our level. Let's wait for market to close below this level also. It's not closing below this level. It's going up. Yeah, there is no entry here. So this is the 4 AM candle. After closing that 4 AM candle, we won't trade after the 5 AM. So there is no entry for us. Let's go to the New York session. On the New York session, we got this level is broken by this big red candle, and then again this level. So there is the 2 PY. Let's go to the lower time frame. And the lower time frame we see this is the our target point. Yeah, it's closing above the PY, and we can see it's closing above the PY and then below the PY, and then below the PY, and also it gives the inverse fair value gap, and also it's forming the candle range, broken candle range. And then there is our SL, there is our entry point, and this is our take profit, and then this is our break-even point. Before it hit our TP, it reached to our entry point, and then took our break-even. And this is the break-even trade. Let's go to the next trade. This is the 10 AM candle. It's breaking below the candle. So this is the PI for the 10 AM. This is the PY for the 11 a.m. So let's wait for candle to reach our PY. It reached to our PY and then it's not breaking our PY level. I think it's gone up. So it's not closing below the PY. So let's go to the next rundown session. This is the 25 December. This is the 26th December. This green candle closed above this level. So our trade will be. So let's wait for the market to reach to our level. It reached to our level. Let's wait for the market to form inverse FVG and then it's forming inverse FVG, and let's wait for the market to close above the PY. Let's wait for market to close above the PY. And here we can see it close above the PY, and yeah, there is no entry because it's closed below this 1 hour candle is closed and then it closed below this PY level. So there is no any entry here. I think there is no any entry here. Let's wait for the next candle. This is not our time, and this is the point. This is the 9 a.m. candle. Let's see how it forms here. This is the level, and then this is the level, and then this is the another level. Let's wait for the 9 a.m. candle to reach to our TP, to reach to our PY. Let's wait for the candle to reach to our PY, and we can see, yeah, it reached to our PY, and then this becomes the level from where market is retracing to our PY. Let's wait for market to close above the PY, and then here we can see there was the another PY, but let's wait for market to close above the PY. Yeah, it's closing above the PY, and then our SR will be at this level, and then TP will be at this level, and our break-even point will be like this. Let's see how it goes. Yeah, it is to our TP, so it's 1:1.4. This is the 26th December trade. Let's journal it. And again we can see it's like 1:1.4. 1:1.4. Trade. Let's wait for our next candle. This is the high of the candle broken by the 10 a.m. candle. Let's wait for market to reach to our level. It reached to our level like this. And let's see. And it's not closing below the PY. It closed below the PY, and then above the PY it's forming the inverse. It's forming the inverse fair value gap also, and then in this level we will get our entry, and then our break-even point will be like this. It is our break-even point, and then we move SL to break-even, and then it's our break-even. So this is the break-even trade. If you want more backtesting, you can also watch this video with the more information. Also, if you want the complete ICC trading model for swing scalping, you can also watch this video. And yeah, that's it for today. That's the full breakdown of how I personally apply the ICC CCT concept when trading gold. Remember, this is not about copying trades. It's about understanding the logic, building patience, and executing with discipline. What works for me may not work for everyone, so always test on your own chart and manage your risks properly. If this video helped you to see the market little clear, make sure to like, subscribe, and turn on the notifications so you don't miss the next breakdown. Drop a comment if you want me to go deeper into any specific concept. Until the next one, stay patient, stay disciplined, and trade smart.